Are we live? Are we live? I think we're live. Let me move the desk up a little bit. Hey everybody, it is Thursday, September the 25th, 2025, and welcome to the Financial Thing. Sometimes, not always, weekly live stream. There we go. Hope you're all doing well this evening, or today, or this morning, wherever you are, tomorrow morning, I don't know. It is a very balmy 33 degrees here, Celsius in Orlando, sunny Florida. Hopefully it's not too bad where you are today, but it's been nice here. We haven't had a lot of rain, which is very, very unusual for the summertime. Usually it rains here every day during the summer, but it has been a weird summer. We've touched wood and not really had any hurricane problems. Having said that, whether you care about this or not, I think you do. I think you like weather. I think you like weather updates, but yeah, we got this this disturbance out here. Here's where we are, right here. Boom. Where the mouse is. Hopefully you can see that. Right here. And we have this disturbance over, looks like close to the Bahamas. Hopefully it's going to stay offshore and not cause too many problems. Tropical storm hummed up. But look at this. Hurricane Gabrielle. And I don't know if you knew this, but this thing is headed to, let me show you where it's headed. This thing came all the way from down here off the coast of Africa. And then it just went all the way up here and boomeranged right back around across the Atlantic. And now it is going to hit the Azores. And I didn't know that the Azores had hurricanes. I really didn't. I thought that was a U.S. and Caribbean thing. But it looked like it was headed to northern Spain, this storm. But now it looks like it's just going to dump a bunch of rain on Morocco. So hopefully it doesn't affect the Azores too badly. These storms can be a real pain in the rumpus, but right now it's 75 miles an hour, so it's a decent storm. This storm was 150 miles an hour at one point. Anyway, that's what's going on with the weather. Of course, we're not a weather YouTube channel. We're here to talk about investing and peer-to-peer lending and other things. Cool. Today has been a absolutely brutal stock market day. For anybody that follows this stuff, yeah, we've had some downturns, but we're going to talk about a little bit of peer-to-peer lending stuff tonight. Folk to Folk has had a change at the head. The jockey of Folk to Folk has stepped down, so we'll talk about that. I'm going to show you my unbolted account. I had somebody ask me a few days ago whether I was still invested through unbolted loans, so I'm going to show you that account, how it's doing. Yes, I am, by the way. We're going to look at London House Exchange, aka Property Partner, one of my poorer choices in the alternative investing world. We'll talk a little bit about Bond Mason. Some of you might have gotten an email from Bond Mason, which was kind of a blast from the past. We will look at the Trading 212 portfolio. I did make an addition to the portfolio today, actually, so I'll show you what I did there, and a couple of letters from the mailbag, so we will get into that. Thanks again for joining. If you haven't subscribed, please do. Please hit that like button. It only takes a second, helps us out here a lot. Can you believe I think I've been doing these videos now for maybe 9 years? I thought it was 5 or 6, and then I'm looking at my old videos thinking, wow, it's been almost 9 years. It'll be a decade of doing this. That's crazy. A decade. That'd be 20% of my lifetime at my age right now, which is a little bit less than 20%, like 18%. That's crazy. But some of you sat through these videos right from the start, from years and years ago. I really appreciate you being here. For anybody that's new, welcome. Yeah, subscribe. It helps out a lot. Anyways. Hi to Invest24 in West London. Do my compass west. West, that's on the left side. Peter Vince, lovely day in Leatherhead. Sorry Several bags of wigs dug up now for a quiet evening while Lawrence does the heavy lifting. Yeah, isn't that right? Evening all from Paul Bagworth and Kenilworth. David Dawson is here, and Dave Ellard is here. So nice to see everybody. Let's get right into it, shall we? There was a news release that came out, press release. Let me enlarge that for you folks who have bad eyesight like me. 23rd of September, this one was announced 2 days ago. Folk to Folk, the UK's largest peer-to-peer lending business platform, has announced a planned leadership transition to build on 6 years of profitability, the company of its next phase of growth. They have appointed Kawai Chung as CEO, as Roy Warren, the present CEO, is stepping down to retire. I'm honestly surprised that he didn't do it earlier. I mean, I don't know how old Roy Warren is, but he's certainly not a spring chicken. But yeah, he's stepping down to let Kawai, hopefully I said that right, Kawai Chung step in as the CEO. Roy Warren, managing director of Folk to Folk since 2019, is retiring from the business and will join the board as an independent non-executive director in January of 2026. So he's got another few months there at the head of the helm. From the 23rd of September 2025, he's succeeded by Kawai Chung as CEO. So I take that back. He's actually stepped down now. So he'll join as a board director, non-executive in January 2026. He stepped down. And so who is this guy? Who is this Kawai Chung? I mean, Folk to Folk has been a pretty solid peer-to-peer lending offering for people with high net worth. See, they do have a high entry point financially. But Kawai joins, let's see who he is. Kawai joins Folk to Folk with over 20 years experience in financial services and asset-backed investing. He has held senior leadership roles at challenger banks, private equity firms, and investment managers, including Silver Rock Financial Services, now part of GB Bank, Intriva Capital, and ARA Van. His expertise spans capital markets, small and medium enterprise lending, and structured finance, with a strong track record in scaling lending businesses and building investor confidence. He is a chartered accountant and holds degrees from London School of Economics, University College London. He says he's honored to be joining Folk to Folk at such a pivotal moment. The business carved out a distinct space in UK finance. He's really excited to build on that legacy. His focus will be on broadening reach, building new investment opportunities, and continuing to deliver for investors while supporting regional businesses. The company also announces the appointment of Claire Richards as Executive Director Designate, subject to FCA approval. She is the head of operations of Folk to Folk and has been with the company since 2018. They have been going Folk to Folk since 2013, 12 years in the peer-to-peer lending space, sticking and staying to their course. They have facilitated more than £780 million in secured lending to SMEs across the UK. So I jumped on LinkedIn. I wanted to see who Mr. Kawai Chung is. Should we get him? Should we try to get him on the stream? Should we see if he'll do it? I think that would be cool. So his experience, you can see here, September 2025, present, 1 month, Chief Executive Officer at Folk to Folk, and then Head of Assets at Silver Rock Bank for just 1 year. That looks like he was lured away from Silver Rock. And then he was with Intriva Capital for 4 years. 3 years? Yeah, 3 years. A partner at ARA Van for 7 years. And then he was with RBS for 10 years. And mortgage strategy, asset-backed finance, and then those education accolades that he has. So, obviously a very smart man taking the helm. Wouldn't really expect anything less, Folk to Folk, the way they run their company. So, good luck to him. We'll try to get him on the stream. See what happens with that. Who knows whether we'll get him or not. Don't forget, by the way, is it October 19th? We got Mr. Fourthway coming. Neil Faulkner, live. Yeah, it's been a while since I've had a guest on. I'm going to ramp up the guests again. I thought maybe give it a rest, but we're going to ramp it up, get some guests on here. So October 19th, don't forget it. Bring your cup of tea and your biscuits, your digestives, chocolate or the regular ones. Anyway, I'm going to show you. So Unbolted, I've kind of, I didn't have a big position in Unbolted. It's because when I was doing my peer-to-peer investing, I had a lot of platforms running. I didn't want to put too much money into one. I think I got it up to about £1,000. I needed a bit of cash to buy some dog food and whatnot, so I ran it down a bit just to see, how quickly I could get the cash out. And I ran down from about £820 now down to 653. But you can see I've had a couple of thousand in there at one point, and it's just really such an easy website. It's not flashy. There's no bells and whistles. The investments do what they say they're going to do. I'll show you my loan portfolio. So everything else that I have in here is just set to reinvest. You can see here I had £5 in a bunch of different loans. I think I upped it to 15. But mainly just more gold and jewelry, Rolexes, Patek Philippe. See what else we have. It's interesting to go through these. And these things, they get renewed a lot. So they're usually 6-month loans that tend to renew quite often. So there's just nothing really to do. I don't do any of the manual investing. So yeah, I think it's a good balance out to other peer-to-peer lending platforms, and they've been running for a while now, so they do have a good track record, pretty good history. It's not like they've been around for a couple of years, so I'll continue to have a small position in them. If I had more money available, I'd probably just continue building out the position in there, but for now it's going to be that. So yeah, I think it's good. Let's see how many overdue loans they have. Come on. Give it to me. Let's do a new tab. Overdue loans. Let's see. Look at this. 10th of February, 2022. Yeah, imagine artwork. I don't know if this is the same borrower. Full recovery mode. No contact from the borrower. Strange collectibles. These are overdue. Collectibles, prints. They get sold at auction here. It gives you this. This is what I say about no bells and whistles. Look at this. How they've shoved the comments into one little column so you get to read all the way down. Silver bar. That's pretty easy to sell. Stuff like that is just recoveries. This is the beautiful thing about Unbolted, and they get stuff like diamond rings, gold. So easy to sell at auction. These things become a little bit more problematic, things like artwork, because artwork is worth what somebody is willing to pay for it, whereas gold has really gone up in value. So things that they've lent out in the past at lower gold amounts, now gold has just really shot up. So they've done very well, probably Unbolted, on things that they've been kept from default as a result of default. 1 ounce of gold, 24 karat, on sale with Hat and Garden metal. So yeah, I mean, stuff like that. There's really just not that much that's overdue. Obviously I think Unbolted really shines when it comes to jewelry and precious metals. It's just the simplest. It's the simplest thing to lend on, and it's the simplest thing to sell if you go into default. So anyway, good stuff there. Got an email. Check this out. For anybody that remembers Property Partner, they've been around for a long time. I don't have particularly good things to say about what happened to the company. It just seems to me like they bit off more they could chew with borrowing money to rack up these mortgages. Things didn't really work out well on some of the deals that they offered. I was early on in my peer-to-peer lending endeavor. I was just throwing out money on these websites and small bits. I mean, not a huge amount, but it's been a long time. I mean, I think I've been in this for 7-8 years. Anyway, so I get an email. It says, you are the beneficial holder of shares in PPNV SPV5, which invested in Boyd Street, London. They sold the property. I always vote on selling everything because at this point I just want to get what I can back out of it. I think definitely have taken some losses. So I always say sell. I don't think there's any point in hanging on to an investment that really doesn't show any potential for growth. And that's one thing that I see about Property Partner and LHX is I don't see any new offerings. I don't know how they're making money right now. It's a bit confusing. So at that point, a couple of years ago, I said it's just time to exit. So I always vote to sell. And I think everybody else does because I don't think I've seen any of their properties that people have voted to hang on to. Anyway, so this property goes into voluntary liquidation. And by the way, when one of these SPVs goes into voluntary liquidation, LHX has to pay for that. And I know this because I put one of my own small companies into voluntary liquidation. And it wasn't cheap to run it down because you have to do it through a legal company and they charge expenses. So every time that LHX is doing this and they're passing that expenses on to you, the shareholder, it really mounts up. And they have an SPV for every single one of these companies that they're doing. So anyway, they sold it. They put the SPV into voluntary liquidation. And investors got paid out. So I'm going to show you. Let me just log in. Here, I'm going to show you what I got paid out. Remember the old password. Don't want to put that live. So, hopefully most of you were not invested in these companies in these shares. Maybe some of you did well. I don't know. Were you an LHX early investor like me? But I'll go to my portfolio. Let me find it. Sold. Let's go to sold properties. Hopefully you can see this. Enlarge it a little bit. Let's go look at that Boyd Street property. That was one that I really, really, really had high hopes for. This was the one in Whitechapel. And at the time I thought, God, this is going to be great, right? You get to own this beautiful building in Whitechapel. And how could you really go wrong with that? I mean, nice renovation, nice big apartment in London. Yeah, not so much. Here we go, 26.13% loss. And yeah, I had a pretty decent chunk. I think I had one time I had about $3,000 on London House Exchange. And I just, early on I started to sell things off because, I don't know, not any particular reason. There wasn't any insight. I just thought I'm just going to start to liquidate things and hang on to the things that I think we're going to do well. Well, obviously this was not one of them. So took a 26% loss for, hang on, I lost £42, 93p. Capital gain of minus £59. We got £16 in dividends. There's not really anything exciting that happened in that one. But this is the rest of the portfolio too. I'll show you. Let's look at the worst performing one. That was Devonshire. Look at this. Devonshire Place. £109 invested. 52% loss on that one. These are because they overpaid for the properties or expenses were too high. The interest rates obviously went up with lending, so the mortgages became unsustainable. So these investments were bad. And how, when this type of thing happens, the growth of the company is not going to happen because people are not going to want to keep investing, right? So we had Cuppington Road. This was a retail shop. That one we took a I only had £2 and 29p. I think I sold some of that off earlier. I managed to exit that one gracefully, negative 35%. And we got Boyd Street again was one of the biggies. We got here Murlocs Road had 124 pounds in that, lost 5%. And then we did had a few wins. Bridgewater Street, look at that, 300 pounds in that one. I was reckless back then. 3.64% return total. I mean, we're talking about, you can see here that was sold in 2019. So some of those I did exit out earlier. 3.64%. And let's see what our best return investment in this was. Come on. 38.46%. It was nothing on that one. 25% on Amherst Walk. That was on the Thames, I believe. So made a bit of money in that one. That was sold in 2022. And then some of these other ones sold in 2019. Made £24, £20, 16 pounds here. So a little bit of a mixed bag. I bet if I calculated it all out for the amount of time I was invested through LHX, either probably took a loss, maybe made a couple of percent. I don't know. I haven't calculated it out. I probably should do that. Maybe I'll do that for next stream. But yeah, it hasn't been a great investment. It would have been so much easier just to plunk it into something like LoanPad. The money just collects, 4, 5, 6% and be done with it. Because this was just really not great. So I thought I would show that to you. Another thing that was interesting, we got an email from LendInvest. Now, LendInvest has been one of those very kind of steady as she goes investments, but I wanted to show you that they also do make mistakes, which, look, whenever you're lending on property, things are going to happen. There's going to be defaults and there's going to be losses. And LendInvest sent this one out about Hainault Business Park. I tried to log into my LendInvest account, but I couldn't get in there. I'm locked out. I have no idea why, but I couldn't get in. Anyway, it was sold in 2024. The borrower failed to repay the loan. Other options were exhausted, and they appointed fixed charge receivers. During this process, it became clear the property's occupancy was lower than expected, which made the projected cash flow unreliable. The receivers determined that selling this asset as a whole was the best way to maximize value for the investors. The approach was chosen to avoid significant delays. The property was sold in 2024, and the proceeds were distributed at the time according to the terms. We've continued to work on your behalf, exploring whether additional funds can be recovered from third parties. These efforts are ongoing, but due to their complexity, there is no guarantee of further recovery. Based on the current situation, we've decided to write down the outstanding loan balance. This reflects our revised assessment of the recoverable amount and the uncertainty of further recovery options. This loss will be reflected in your annual investment statement for tax purposes. If we are able to recover any additional funds, they'll be returned to investors, blah, blah, blah. We understand this is a difficult and unexpected outcome. While instances of capital losses are rare, they are an inherent risk in property-backed investing. So there you go. LendInvest, the slow and steady horse in the race. Certainly won't have a track record, and I'm sure this won't be the last time that something like this happens. I don't know how much I had in there. I don't think it would have been a lot because I was on the auto lend, but it would have been interesting. I'll try to log in next week when we do the live stream and show you how much they took a capital loss on that. Maybe somebody in the chat knows. I don't know if you are invested. Put it in the chat. Let me know. It'd be nice to know. Look at this. We got an email from a ghost bond mason. This came through in August. I forgot to put it up here. So anyway, it just says, hope you're doing well. Yes, thank you, Mr. Bond Mason. I'm happy to let you know that I intend to close Bond Mason Group Limited and Bond Mason Limited, remove them from Companies House. These companies are dormant following the orderly wind down announced in 2019, 6 years ago, which is now technically complete. All receivables have been collected and written down to zero. There is no further active business. Closing the companies will avoid unnecessary costs. And it also says if you you believe you're owed anything by Bond Mason, please let Mr. Stephen Finley know by the 30th of September 2025. I don't think anybody is owed anything. It's kind of cool, though. I mean, Bond Mason did a very orderly wind down. Everybody got paid their money back. It was awesome. That's what we like to see. That's the way to do business. Stephen says, I'd like to take this opportunity and thank you again for your support and patience during the wind down process. Although it's taken over 6 years, think about that, 6 years. I'm pleased the outcome has been okay for clients with payouts in excess of £25 million, totaling 107% of client account balances as to the date of the 2019 wind down announcement. In case you didn't see, for anybody that hasn't seen the video, there is a video of me with Stephen Finley. This was episode number 3 of the Financial Think podcast, as it was called back then. This was 8 years ago. 8 years ago. And I thought I would just play you a little something because it's kind of nostalgic. It's kind of funny at the same time. Hopefully you can hear this. Hang on. Let me play it. Play. Today, Stephen.
Very good, Lawrence, and thank you for having me. Appreciate the time, and looking forward to the conversation.
Yeah, absolutely. I know I've been trying to get you on to do this for a little while, and we've been going back and forth, so it's great to finally have you. I wanted to tell you a quick joke. You look like a guy that enjoys a joke, so here's one for you. What do you call a guy that has rubber toes?
Don't know.
Roberto.
No, I'm a dad with two young children, 4 and 2, and I find myself making jokes like that, which I'd class as dad jokes. It just sort of naturally evolved, and I don't know if you have children yourself.
Look at that. What a good guy. What a good sense of humor. There he is, Stephen Finley. That was 8 years ago. I cannot believe. 8 years ago. That will... that's what I was doing. I was telling CEOs of... financial companies' dad jokes. You got to have a good sense of humor, right? I mean, if you can't laugh and you can't laugh at yourself, what are you really doing here? Yeah, so Bond Mason. Oh, and I went back to the Wayback Time Machine. I wanted to see what their website looked like back then. Check this out. This was in 2016 in January, 9 years ago, February. This is what the website looked like. I like Bond Mason. You can get 7%. You get 7% back then. Back then, people were earning 8.6% per year. Good on you, Bond Mason. So what the website looks like now. Basically nothing. Yes. Let's see, what else? Oh, Crowd Property. They sent an email saying that they are going to update the current methodology of the average realized returns on the dashboard. The current method displayed is based on a top-down view for each tranche of the loan, with weighting for each loan part that an investor was involved in. Given the number of scenarios, the methodology for this has grown into a complexity, which in turn has made it more difficult for an investor to replicate the same result. With this in mind, they're going to change things for greater transparency. Here are the differences. Only paid back or paid back in full loans will be counted towards the realized average return values. That's a good move. This will mean for relatively new investors who have not had any repaid pledges, realized average return will show as a blank field. For investors that have many partially repaid loans, your new realized average return may be lower, as those are no longer considered crystallized and will only be included once the respective loans are repaid in full. For investors that had capital loss, the loss is now weighted equally to any interest paid, and this will have an impact on the percent you see for realized average returns, or RAR. All input to the equation readily available for investors and use the standard industry XIIR. It's the invested rate of return. The weighting of investment size and length continues to be taken into account within the realized average return equation. This will mean a small longer investment may be taken into account less than a large short-term investment in your portfolio. So, Basically, it's going to just hopefully display a more accurate realized average return in your dashboard. Let's see. Trading 212. It has been a rough day on the stock markets today. Panic has ensued. Bitcoin is falling like a hot stone. Everybody's panicking. Do I panic? Of course not. You shouldn't panic either, because these types of situations are opportunities. And plus, the stock market should be a long-term investment. Let's see what's going on in the Trading 212 portfolio. We were up to, 29,000 something. Let's see. Zoom in. Here we go. At a high point right here, 30,389 pounds. And then we have sunk back now to 28,497. Here we go. Oh dear. Don't make me log in. They're going to make me log in. Hold on. Dear. You can't look at anything without logging in nowadays. Let me log in so I can show you this. There we go. What are we looking at here? This is this one? No, this is 6 months. 6 months since February. S&P 500. People like to draw lines on these things and do technical analysis and blah, 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 which I think a lot of it is really a crock of poo. But you can just see that we've been going up, and then we go down, and then we go up, and then we go down, and then we go down here. We had this dip in April down to 5,000. What a great opportunity, right? The S&P now is at 6,600. You had a great opportunity to get things on a massive discount. But not everybody can pull the trigger, myself included. I did a little bit, but yeah, I always think, it's going to go lower. I'll just wait, and then I don't take action, and then this is what happens: up, 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 up. These pullbacks are really relatively small. If you look here, all we've done is go from 6694, which is the high, down to 6603, and everybody is mass panicking. It happens. These pullbacks are natural. These pullbacks right here represent great opportunities to enter the market with any cash you may have sitting on the sidelines. But everybody waits. Everybody's waiting for this massive crash, right? They want the 2000 pandemic. This crash right here is what they want to come back in. Look, if you'd have gone in here, who had the foresight to do that? Maybe some lucky people did. But, if you managed to get in here, you're doing really well, right? Look at that. Pew. That straight line. This is what they use for technical analysis, these lines. They say, look, it's bouncing off this average. But you were able to get in. Look at that. 5 years ago, 2,231 points. So you 3x'd if you had the foresight. Trading 212. So what did we do? Yeah, well, I'll tell you one thing I did. I wanted to do this yesterday. I forgot. I'm glad I didn't do it yesterday. But there was a sale that took place of Strategy. Strategy has absolutely really gotten hurt because of what's happening with Bitcoin. I don't know what the price is right now. Let's see. It's gone down. I think it was 108, 109. There you go, 109,824. So it has taken a bit of a fall from the highs that was almost at 120. So really only 10% down, but everybody, of course, is saying it's the end of the world. Bitcoin's dead. That's what they always do. So I sold some Strategy off, not because I wanted to. This was a long-term hold for me, but it's because I wanted to put some money into this new position, Iron, down here, which I'll show you in a second. And what I wanted to do was sell this S&P 500 position and take 1,500 pounds of that and to put in an Iron, but I couldn't liquidate this out. This is a fund that is on the UK market, and the UK market was closed. So I ended up selling 1,500 pounds of Strategy, and then tomorrow, as you can see here, I got a sell order for 1,500 pounds in the S&P 500, which I will rebuy the Strategy stock. and reduce this S&P 500. This is a very, very stable play for the portfolio. Really designed as kind of a holding pattern. So when I identify things I want to add to the trading 212, then I can sell some of this S&P 500 to put into this. But the S&P 500 has done well. Look at that. I mean, 13% up. And obviously I've added to this iron position, IREN, which is a integrated data center business. It says down here, they own and operate data centers provided by renewable energy. Its grid connected facilities are purpose-built for power-dense computing applications, and blah, blah, blah. I've done some research there based in Australia. I think this stock, for me, has some real potential. Unfortunately, I did not have the insight to get in when I should have done, which was down here at $5. But hey ho, there you go. I think this stock has some potential. We'll see. It's already up 2% today. So look, I bought this stock today. Just today. Where's the history? I can't. So annoying. I can't remember how to find history. Here we go. History. So you can see right here, purchase today. Those two buys. Paid 45.49 with an exchange rate of 1.33 pounds to the US dollar. That's gone down a little bit too. That was at 1.37 for a while. We were getting a better exchange rate. So have that up a little bit and sold some strategy off. Yeah, strategy is again having a bit of a tough time. So highs up here of 434, I think. Yeah, so down $100. So if you like the strategy stock, you can get some on sale. But other than that, the portfolio, I mean, look, considering that I have zero experience with this type of stock trading, it just goes to prove you that even a guy as dumb as me can make money if you hit the right things at the right time. So we've had a total return of 20,433. Started with 5,500 pounds back in, I think it was 2022. Added another, we had 8,000, 6,000. I can't remember. Yeah, we 8,000 total. You can see here, 8,100 pounds total. So it's gone up 398%. But I wouldn't invest my entire net worth like this. Too risky. But the portfolio is doing well. I think we rebound from this, but who knows? With these interest rate cuts, that is generally seen as very bearish when it comes to investing. I wouldn't be surprised if the markets continue to go into the red, but who knows? I don't have a crystal ball. They've already rebounded a little bit today. See. Look at this NVIDIA stock. God, it just... To me, NVIDIA just seems like kind of a no-brain investment. They are ruling the chip world for AI computing, and as long as AI turns out to be what people say it's going to be, NVIDIA is just going to continue to do well. It just seemed like a no-brainer. And, yeah, so there you go. Kind of like Apple. To me, Apple is a no-brainer. I go to the inventory websites that track inventory for iPhones, like the new iPhone that came out, they're sold out. A lot of shops don't have them for sale in the Apple stores. It's kind of a no-brainer. They're going to have big profits on these iPhone 17s that they've just released. So there you go. Anyway, so that's doing well. I have to do this on a Tesla vote thing, so I'm not going to do that. Let's go to the mailbag. Hi Financial Thing, stumbled upon your channel a year ago or so. Enjoyed the Trading 212 content and stocks. Quick questions. What was the first stock you ever bought? Do you still own it? If not, ever regret selling? What are you buying now? Well, that's what I'm buying now in this Trading 212 portfolio. What's your name? What was his name? Harry. Harry, this is what I'm buying now, so you can check that out. Don't do what I do. It likely is all going to go to zero. Unless I probably... Amazon isn't, and Tesla, well, the S&P certainly won't, but some of these could. So please don't follow me when it comes to what I'm doing. It's just for me. And what was the first stock that I ever bought? You know what? I'm going to go in. See, I think I could still log in. Remember I web share dealing from Halifax? Yeah, I still have that account. And I think I can still go in there. Just let me try to log in. Oh goodness. See if I can remember how to log in. Because if not, I probably won't be. Oh, here we go. Okay. Look at how dated this platform is, and this is what they still offer as a product. You want to buy shares? Check this out. You want to buy shares? This is what it looks like. I mean, it looks like it was from 20 years ago. They're not investing anything in their in their technology. Now, let me see. Go to valuation statement. Here we go. Dealing history. Let's go back. Because I don't know what year. Was it 2005? Goodness. I stopped buying in here. Let's see. When did I stop? 2019, maybe? 2023 was the last. Oh, I sold some Shell shares in 2023, but I really stopped using this platform. You can see here, 2019. Because I thought it was really outdated anyways, and I started using Vanguard at that time. But let's see what the first position. There we go. Okay, here you go. It was when I started really taking investing serious. I'd been saving up for many, many decades, being too afraid to invest anything. So here you go. Just to show you, I practice in some ways what I preach. VVUSEI was bought on the 18th of December 2014 at a price of 26672. So I think that would have been 266 pounds and 72p. Look, I made a almost £20,000 investment, which was a lot for me back then. It was a lot. And I continue to nibble away here in this VVUSI. So what is that? So remember that number 266 266 pounds 72p. Vanguard investment. That's the US equity index tracker. That's this one. This is it. This is the end. It was the US index tracker 11 years ago. Now look at the price. This is why dead people make the best investors. They sit on their hands and don't do anything. They just buy and hold. 1,103 pounds. So we've had a 5x on an index tracker. So anybody that says index trackers don't appreciate in value, we had a 5x from that price, December 2014. 266 pounds of 72. Now I did sell something. Let me see what the first thing I sold was. What did I sell? We sold, look at this, we sold a bond. We had a Vanguard bond back then, which in hindsight looks like a really good sell. So no regrets there, because bonds have just not really been great over the last 10 years. So yeah, Vanguard Global Bond Index Fund. Let's see what the price of that was, because we can go check that out. That was 14,026. So what, 140 pounds? Let's see. See if I can pull up that. That's not going to work, is it? 140 pounds and 26p. Let's see what that price is right now. Let's see if we can Google it. Be interesting to see it. If I did take a guess, I bet that's about 180. What do you think? Oh, look at that. Look at that. Look at that. Ladies and gentlemen, look at that. 158 pounds with a yield of about 3%. So, 158 pounds. That is 11 years of almost nothing, zero gains. Zero gains. Maybe, well, with the 3%, okay, you're making a little bit, but bonds, this is why bonds are so troublesome at the moment. And look at the risk factor, 4 out of 7. So, no, to answer your question, I do not regret selling that product. Did I have any foresight that this was going to turn out this way? Absolutely not. Pure luck. Pure just thinking, I got time to ride any crashes in the market out. I was 40. How old was that? 11 years ago? I was 41. Just started investing. I said, screw it. I'm just going to go for it. So it is interesting to go back and look at old histories. I bet some of you out there have histories that go back a lot further than what I have, because I started late, early 40s, and didn't invest anything before that. But you can see some funds I had back then too. This FVIUKRSINTZ, FU quit. Look at this. Look at the name of this fund. This is funny. FU quit. What the hell? What the hell is FU quit? Oh, look, Fundsmith Equity. Why is it called FU quit? Like FU quit. I sold that one. I'm sure that one's done probably pretty good. But I sold that one in 2015. When I learned about managed funds, and I just didn't want to do that anymore and wanted to go straight indexes. So there you go. Pretty cool. Let's do another question from the mailbag. Hi, Lawrence. Hope you're living well and still drinking the green tea. I am, yes. Green tea matcha powder. Powerful stuff. Not a peer-to-peer question, but was looking for a bit of guidance. I'm 63 years young. I've worked most of my life. I've never made a big wage, but I haven't starved either. I don't have any kids, so no one to leave my paid-off house to. I have $150,000 in my pension pot. That's pounds. Gives me a bit of monthly income, and I have a work pension that more than covers my monthly living expenses as I live below my means. I'm currently driving a 1997 Ford Mondeo with piles of miles on the clock. I want a new car. I don't need one, but I want one. I want to treat myself, but I'm having a lot of mental anguish over this. I never treated myself to anything expensive in my life. I was thinking about spending about £25,000 on a car. The reason I'm asking is because I know you bought yourself a car recently. What do you think? Cheers and keep up the good work. Stanley in Cheshire. Yeah, thank you for the email. It's an interesting one. It's an interesting one because, especially in the UK, we're taught to save, 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 save. Don't spend, just save, save. I came across a video actually yesterday, which I thought was quite relevant to this. Let me play it for you. Let's see here.
He said, I know basically what you're making here. How do you do it? I said, well, it's a very, very difficult, very complex, very mathematical equation. I said, you sure you want to hear it? He said, I want to hear it. I said, you sure? He said, man, I'm sure. How do you do it? I said, we say no. We just say no. No, we're not going out to eat. No, we don't need satellite TV. No, you don't need $100 pair of basketball shoes. No, we don't have to have TV dinners. No, my wife can cook. You just say no. No, I bought a 1976 Dodge Dart, paid cash for, for $700. I don't need a car payment. I just need a vehicle that'll get me from point A to point B. I said, just say no.
So I saw this video, and this is really the extreme position that I used to go by this type of thinking for a long time, especially when I started investing. I thought, I'm not going to spend any money. I just need to save every penny, every penny, every penny. Just keep saving, keep saving, keep saving. And then I really shifted my mindset. The first time I shifted my mindset was, I think it was I was in my mid-40s and my friend died. 43 years old, he got liver cancer, and he passed. And then I started thinking about, what the heck is the point in saving everything? What if you don't make it, first of all? And that guy is an extreme example of what I don't think is the right thing to do. He's not living life, right? If you get enjoyment out of things and you're not putting yourself in a bad financial position, I say go for it. 25 grand. I mean, this to spend on a car. Yeah, it's okay. You're taking about 25% of your pension pot. I don't know if you can get financing on a car like that. Sometimes you can get really good interest rates. I'm not one for taking on debt myself, but if somebody throws 0% interest at me, I'm going to certainly consider it because it's free money. But I say at 63 years old or young, as you say, go for it. You've got 150 grand. You have a work pension that covers your monthly expenses. You'd have 125 grand left. And treat yourself. And when I treated myself to my car, this was back in July, I had not purchased a car for a long time. The last car I purchased was in 2017. I paid $15,000 for a Mazda 3 used. It had 7,000 miles on it. And I had mental anguish over the same thing. I thought, I really want to buy myself a Tesla. I want to buy a Tesla. I've always wanted a Tesla. And then, I just started thinking about what if I don't know how long I'm going to be alive for. I'm not putting myself in debt buying this car. So I can do it. It's not going to kill me. And I did it. And it was a great, maybe I won't say this in a year, but it was a great decision. Every time I get behind the wheel of this car, the technology, and it puts a big smile on my face. I get enjoyment and utility enjoyment out of that vehicle every single day that I use it. And I don't have to go to the petrol station. I don't have to go get oil changes, and I just have a good time in the car. Maybe that won't be the same in 3 years. Maybe I'll look at it and go, this car's old. I don't like it anymore. But I say if it's something you really want to do for yourself and you're not putting yourself in debt or in a financial problem doing it, go do it. Go do it. Not last week. About 5 or 6 weeks ago, I get a message from my friend that I went to college with down in Bournemouth. He said, yeah, our friend Steve died. He had a heart attack. He was 51 years old. And I really think about stuff like that now. Now, I don't have the same responsibilities that some other people have. I don't have kids. I don't have a wife. My situation may be different, but I say if you can go for it, that mental decision of just hanging on to everything, saving every penny, for what? So you're in the ground, cold, buried under, pushing up daisies, as they say. You've got all your money in your bank account. Great. For what? And what's the purpose? Life is to be enjoyed. You want to spend £100 on a pair of shoes and you can afford it, go spend money on the shoes. So there's such big extreme views on saving and spending and, will I have enough money for retirement? Blah, blah, blah. Plan, be responsible, invest when you can, take opportunities and enjoy life. That's what I say. So Stanley, I say you go for it. Susie Ormond would tell you no. Dave Ramsey, these finance gurus would say no. I say yeah. I say you go for it. Maybe you don't. Maybe you could find a car for less too if you're worried about it. Go find a car for $20,000. I don't know. I don't know what type of car you're looking at, but a 1997 Ford Mondeo is depressing. Yeah. Go for it. Enjoy. Anyway, that's what I got for you this evening. I hope you enjoyed the content. If you did, hit that thumbs up and subscribe. See if you have any interesting chats. I'm going to get out of here. I'm going to go hit the gym. It's 3:24 p.m. here. Heading into the autumn or the fall, as they say in America. It won't start to get cool here until probably November, so we got another couple of months of hot weather. Ramping up the guests is a great idea. Yes. I will ramp up the guests. Nesta. Okay, what is Nesta? I'll check into that. $2,500 seems a good amount in unbolted, then keep around 50 to 100 pound float. I don't know what that means. Have an ISA in a normal account. Cool. Quite a lot of new offerings. Mortgage, bonds, bridging loans, and now private investments. I get scared when I see stuff like that. I want to see jewelry. What have Bond Mason done about the outstanding funds due from collateral? I don't know. No idea. Did you tell dad jokes to all the CEOs of defunct platforms? Is there a pattern? No. I did not. Annabelle, welcome to the stream, Annabelle. Nyron. I'm so cross and let down by crowd property. Most of my loans are now 2 years overdue. A little hope of getting capital back. Yeah, it's not great. Read Morgan Housel's new book, The Art of Spending Money. Okay, cool. It's important to treat yourself. I'm torn between a Porsche 911 Carrera 4S and a Lotus Emira, both around 100K. Is this really true? Is this really true? Are you really torn? I wouldn't spend 100 grand on a car, but if I was, it would be the Porsche. That'd be an easy one. The new Porsche 911 looks awesome. They got a new Turbo S that looks, but I don't have the. I just couldn't spend that much money on a car. Oh yeah. Anyway. Listen, I'm going to get out of here. Have a great weekend. I think I'll be back next week on Thursday. We'll see. Keep your eyes on the emails. And thanks for joining. That's all I got for you this week. Hope you enjoyed it. All right. Take care. Bye-bye.